As I said before, we want to first start with the definition of the SUKUK. And SUKUKs are the securities issued by an asset lease companies. In other words, some CSTs called it special purpose vehicles for the purpose of financing all kinds of assets and rights, and which enables its holders to get a proportionate share from the revenues derived out of such as assets and rights. In Turkey, we have two regulations according to the government or the corporate-based schools. For the government, lease certificates are regulated under law of public finance and debt management. On the other hand, corporate schools are regulated under Communique of the Capital Markets of Board, and it's about June 17th to 2013. And we have some figures and some data over here. Turkey's total SUKUK issues is increasing every year, and we have some data according to Islamic Financial Service Industry 2020 Stability Report. Turkey has about 2.6 market share from the global banking assets with its outstanding and continuous SUKUK performance. And as you can see, Turkey get an 8.7 market share from the global SUKUK issuances. From the figures, you can see that on the corporate side, the Turkey has a bigger part of the total issued SUKUKs. But on the other corporate side and the government side, it is continuously increasing according to the demands of our domestic and foreign investors. We have 5 types of SUKUKs currently that is issued by our members. The first one is ownership-based SUKUKs called IJERA, are lease certificates issued to finance the assets and rights to acquired by asset lease company, LIC, from originator in order to be leased to originator or third parties or to be managed in the name of LIC. All government-based SUKUKs are issued by this way. All the SUKUK, but on the other hand, corporate side do not prefer this type because of its high operational work and very complex legal process. Especially in this model, you have to transfer the deed of the title of the asset to the LIC. So this process requires a lot of paperwork and some complex operations under the Turkish law. So the corporate side prefer the second SUKUK, let's call it management agreement-based lease certificates, called Vakala, are the lease certificate issued for the purpose of transfer of revenues obtained as a result of management of assets or rights owned by the originator in favor of LIC, also including the lease of them until end of the maturity to LIC within the frame of provision of the management agreement. These two are the most common ones, and we will talk about the other 3 of them. And at the end of the slide, we will give some numbers about the issuing amounts. The third one is Murabaha, are lease certificates issued to finance to purchase of certain assets or rights by LIC in order to be sold different payment bases to other companies eligible, such as banks, mortgage finance institutions, real estate investment companies, etc. And the other one is the Mudarabaha Musharraka, are certificates issued by LIC for the purpose of the partnership in joint venture. In Turkey, there is only one SUKUK is issued under this type. And the last one is the called istisna, are the lease certificates issued for the purpose of creation of works pursuant to APC contract to which LIC is party as a worker. And we want to talk about some milestones of SUKUK. First government lease certificate issued by Turkish Treasury in 2012. And the amount is nearly 1.2 billion Turkish liras. But now the total share is increased up to nearly 25 billion shares. Then we can talk about a huge increase in the SUKUK issuances. And if we talk about the corporate size, the first corporate lease certificate issued in 2010. As you can see the below figures, the most common issue type is Vakala for the corporate side. Nearly 95% of the SUKUK are issued by this way. And for the figures on the left, we compare the SUKUK issuances to the debt issuances on the government side and also on the corporate side. As you can see, the total lease certificate issue amount is equal to 15% of the total government issue amount. And this rate is a little bit more on the corporate side, and it is nearly 23% on the corporate side. As you can see, there is an increase on the SUKUK performance of the Turkish global market. If we talk about the issue process, of course, on the corporate side, the company, after the share board approval, all the SUKUK shares must be issued under the LIC's account. And then the SUKUKs are transferred to intermediaries, institutions, investor accounts. We have three types of offering. One of them is public offering that have to be traded at best on the debt securities market. The second one is the private placement. And the final one, the most common one, is the sales to qualified investors. And this can be also traded on the base market. When we look at the numbers, the huge part is sales to qualified investors. Nearly 70% of the issues are done under this way. If we talk about the SUKUKs that are trading at Borsa Istanbul, Borsa Istanbul is the trading part of this process, and Takas Istanbul is the netting, and finally MKK is the settlement side of this process, because all the accounts and all the holdings are kept under MKK. So we transfer all the necessary movements from investor to investor or issuer to investor under MKK system. And if we talk about the corporate bond side, corporate SUKUKs, the coupon payments and the redemption payments are done through MKK. MKK send then payment information to the issuer, and the issuer transfer the cash to Takas Bank Istanbul. Takas Bank Istanbul is our cash correspondent bank, and we distribute the related cash amounts by using Takas Bank system. When the issuer pays the related cash amount at MKK's cash account under Takas Bank, we distribute the amounts to intermediary institutions' cash accounts and at MKK. MKK do not pay the related amounts directly to the investors. MKK do this. Intermediary institutions' obligation to distribute the money to the investor accounts on their side. MKK only paid the whole amount to the intermediary, then intermediary obligation to distribute the cash account to their clients under their accounts. And when we again look at the numbers, there is a total 50 billion of payment was done through MKK system. And these data belong to 2002 data. And we want to talk about the final topic about the taxation. The earnings of non-resident and full-time taxpayer, real persons from buying and selling of lease certificates and income are subject to 10% income tax. But Turkish government made an exception until end of July. Lease certificates that has 6 month maturity has 5%, 6 to 12 months has 3, and over 1 year has 0 income at the moment. But maybe from after July, maybe this period can be extended or not. We will follow the Turkish government's decisions. And there is one exception too. Gold-backed lease certificates are subject to 0% income tax. And as you know, the legal entities taxation is 0. If I want to give some examples about the government-based lease certificates, these are the gold-based and the foreign currency-based are the most common ones that issued by our government. And at the moment, the government issued SUKUKs has the 60% share of the total SUKUK issues of Turkey. And after this detail, my presentation is finished at that moment. I hope you enjoy our presentation. Thank you very much.
Thank you, Onur. Yes, we very much enjoyed your presentation. And thank you very much for all the details you provided with regards to accounting and processing. And all the data aspects. Yes, that was very good presentation. Thank you so much for all the details you provided. So in case there will be any questions, we will contact you formally. Yes, I see the feedback from participants that they liked it very much. Thank you.
Thank you very much.
Thank you.